Hello friends, welcome to Letstute Accountancy. So today we are starting with the question 6 of departmental accounts. A firm has two departments, cloth and dress. Dress department gets all its requirement of cloth from cloth department at usual selling price. So over here we can find out that the cloth department is transferring materials to this dress department and it is transferred at usual selling price. So it is transferred at some profit, charging some profit on the cost, and that we term as invoice price. So it is transferred at invoice price or selling price. From the following particulars, prepare departmental trading and profit and loss account for the year ended 31st December 2019. Particulars: cloth department, dress department, opening stock, purchases, sales, transfer to dress department, manufacturing expenses, selling expenses, rent and closing stock. The stocks in dress department are assumed to be consisting of 75% cloth and 25% other expenses. The cloth department earned a gross profit of 15% in the year 2018. So that is the last year. Current year is 31st December 2019. So current year is 2019. General expense of the business as a whole came to 50,000. So that is the whole company's expenses 50,000. So over here we are required to prepare departmental trading and profit and loss account. Now again, this is very commonly asked question. They give two departments, one transfer goods to the other department, and whenever the goods are transferred at selling price, that is by charging some profit on that, we need to calculate stock reserve. So over here the main important part would be the calculation of the stock reserve. So first of all, we'll start with the departmental trading and profit and loss account. So this is my departmental trading and profit and loss account for the two departments, and I've also prepared general P&L account because there is some general expenses, and also we need to give effect for the stock reserve. So starting with this, first opening stock, so that will come to trading debit. So 2 opening stock. For cloth department it is 1,50,000. For dress department it is 25,000. Then we have purchases. So 2 purchases, it is 10 lakhs. And for dress department it is 7,500. If you can see, this purchase in this dress department is very low because all the requirement of the goods for this dress department is supplied by cloth department itself, which was given in the first paragraph in the question. Then that is the sales. So by sales, by cloth department it is 11 lakhs, and by dress department it is 2,25,000. Then transfer to dress department. Now that is your inter-department transfer. So cloth department is transferring goods to dress department. So we will credit in cloth department because for cloth it is as good as sales. We can say this sales by the cloth department is towards the outsiders, but this sales transfer to dress department, it is kind of inter-department transfer. So these both are sales. To outsiders it would be obviously at selling price by charging some profit, and in this inter-department transfer also this is at usual selling price. So this sales is also at the selling price. So that would be credited to cloth department because cloth department is transferring some goods, and it would be debited to dress department because dress department is receiving those goods. So for dress department it is as good as purchases. For dress, these purchases are from the outsiders, and this 1,50,000 purchase would be from the other department. So in credit side by inter-department transfer, or we can even write as by department by transfer to a dress department to transfer from cloth department, or simply by inter-department transfer. So it would be credited in cloth department 1,50,000 and 2 inter-department transfer in dress department would be 1,50,000. Next we have Manufacturing expenses, now there is no manufacturing expense in cloth department, so that is only in dress department. That will also go on the trading side. So trading debit, manufacturing expenses dash and 30,000. Next, selling expense. Now selling expense will go to departmental P&L account. So leave some space for gross profit and all. So over here I'll say 2 selling expenses. It is 10,000 for cloth department and 3,000 for dress department. Then we have rent. Again the allocation for each department is directly given in the question, 5,000 and 4,000. Sometimes they might give you some salary expense or any other expense, allocation is not given. So if the expenses are directly related to purchase, we divide in purchase ratio. If it is related to sales, we divide in sales ratio. And if nothing specified, so we sometimes divide the like salary expense in the sales ratio or something with some assumption. Then we have closing stock. So trading credit by closing stock. If you see, the preparation of trading and profit and loss account is very simple, just like what we have done for final accounts. It is very simple. Whatever the trading items are there will go to departmental trading account and divide between the departments, and whatever the indirect income and expenses are there will go to departmental P&L account and allocate between the departments. And over here allocation is also not required because directly the figures are given. So we are done with opening stock, purchase, sales to the outsiders, interdepartment transfer, manufacturing expenses, selling expenses, rent and closing stock. Now the stocks in dress department are assumed to be consisting of 75% cloth and 25% other expenses. Just keep the statement pending, this will be required for stock reserve. The cloth department earned a gross profit of 15% in 2018. So we'll just see how this 15% is useful for this question because we are in the year 2019. So it is departmental trading and profit and loss account for the year ended 31st December 19. And general expenses of the business as a whole came to 50,000. So that would go to general P&L account. So I would say 2 general expenses. Now the allocation of which is not possible will go to general P&L account because that is for the business as a whole and it is 50,000. So that's done. So now if you just see, we are done with all the posting of the items, and the last thing remaining is the calculation of the stock reserve. Remember, stock reserve calculation will come only if the goods are transferred between the departments at selling price or at invoice price, or they can give that charging some loading on the cost price. Then, and if the receiving department still held those goods in the stock of receiving department, if those goods are still there, then you need to calculate stock reserve. Over here the goods are transferred to the dress department at selling price, and it is given that the stock in dress department are assumed to be 75% cloth. So out of the stock in this dress department, 75% would be cloth received from this other department. So that is why we need to calculate stock reserve over here. So that we will do afterwards. First of all, we can find out just gross profit and net profit, because while calculating gross profit and net profit for department, we do not give effect for the stock reserve. So just close this account. So over here your credit side is more, 11 lakhs plus 1,50,000 plus 1 lakh. So that is 13,50,000. 13,50,000 minus 1,50,000 minus 10 lakhs. So that profit comes to 2 lakh. And for dress department is 2,25,000 plus 30,000. It is 2,55,000. Minus 25,000 minus 7,500 minus 1,50,000 minus 30,000. So that comes to 42,500 to gross profit carried down by gross profit brought down 2 lakhs and 42,500. Total this departmental profit and loss account. Now this is 2 lakhs. Minus 10,000 and 5,000, 15,000. So that comes to 1,85,000. And this is 42,500. So it is 42,500 minus 7,000. 3 plus 4, 7,000. So that is 35,500. To net profit carried down. Now this net profit would be transferred to general P&L account. So in general P&L account we'll have by net profit, cloth and dress department. So net profit of cloth department is 1,85,000 and it is 35,500. And the last part, which is this remaining, is your stock reserve. So that is the most important part of this question. Stock reserve. Now, as I always say, as we have discussed in previous questions also, for stock reserve you need always 2 elements. First, if the goods are transferred at profit, you need the profit margin of the transferring department. At what profit, at what price the goods are transferred by one department to other department. So over here, when the goods are transferred by cloth department to dress department, we first need what profit did the cloth department charge while transferring the goods. And second, the stock of the receiving department, and in that also the stock which is received from interdepartmental transfer at invoice price, and it should be still lying in the closing stock, because if it is sold, then some profit would have been earned by cloth department, some would have been earned by dress department, but overall company earned a profit, then you need not reverse the unrealized profit, because the profit has been realized, maybe by some by the cloth department and some by dress department, but overall company realized the profit. But we need to reverse the unrealized profit, because if cloth transfers some goods to dress department and dress department has not yet sold those goods, then in the stock of this dress department there would be some profit charged by this cloth department. And if you could just see this general P&L account, in general P&L we have merged the profit of both the department, and this total profit is going to be transferred to balance sheet. Now I can say, if in this cloth department there is some profit which is charged in the stock lying with dress, then that profit is not yet realized because the stock has not been sold. So we need to reverse that unrealized profit, which we term as stock reserve. So this already we have discussed in our second session, the entire concept of interdepartment transfer and when to calculate, how to calculate stock reserve. So if you still have doubt, you can just go to that session and you can have a quick review of this. Now over here, when we calculate stock reserve, you need to calculate on the stock of dress department, and while you calculate the stock reserve of the stock of dress department, do remember that you need to consider opening stock and closing stock, both the stocks. Not only in the closing stock there would be some cloth, but also in this opening stock there would be some cloth, because this opening stock would have been closing stock of the previous year. And since nothing is specified for the previous year, we can assume the policy which is for the current year would have been same for the previous year also. So in the current year, if dress department gets all its requirement of cloth from cloth department at selling price, in previous year also dress department would have been receiving cloth from this cloth department at selling price. So there would be some unrealized profit in this opening stock also. So we need to calculate unrealized profit on opening stock and on closing stock. So I'll make just two columns, one for opening stock, another for closing stock. Now as we discussed, we first need two elements, the profit margin of the transferor and the stock of receiver. So first I would say profit margin of transferor. Transferor is cloth department. So profit margin of cloth department. Now this opening stock is the closing stock of the last year, and the profit which would have been charged in the last year, that profit ratio is given over here as 15%. See, the cloth department earned a gross profit of 15% in 2018. 2018 is your last year. Last year's closing stock, that is just a brought down figure as opening stock for the current year. Now also see over here, in your previous sums, they always used to give you the data regarding the stock reserve or the profit charge while transferring the goods. Like in the previous question of manager's commission thing, there was given the goods are transferred from A to B at 25% on cost, or B to C at 20% on invoice price, and so on. So there the rate of profit was given easily in the question, that at this profit the goods have been transferred. But over here, if you just see, they have specified goods are transferred at usual selling price. Do they have specified any profit margin over here? Yes, they have specified 15% for last year, but they have not specified any profit margin for the current year. In case, if we don't have any data for the current year, we assume that the profit margin also remain constant. We would apply 15% for last year's also, last year's closing stock, that is current year's opening stock also, and 15% for current year's closing stock also. But to calculate gross profit for the current year, we have departmental trading account, and this trading account can easily give us gross profit ratio for the current year. So if you just see profit margin of cloth department, that is for 2018 it was given as 15%, that we apply for the opening stock. But for the current year, we need gross profit ratio. What is the formula for this gross profit ratio? It is gross profit upon net sales into 100. Okay, do remember this formula, GP ratio. Now GP ratio is gross profit ratio. Now generally we always calculate GP ratio and we don't calculate net profit ratio on this, because when we are talking about the trading thing, or we are talking about the goods thing, so we always see the gross margin of the business. So our gross margin over here is calculated by gross profit divided by net sales. By net sales, because we earn this profit on sales, not on our cost. Okay, when you sell the goods, you earn profit. So that is why gross profit on sales. And when we use this word net sales means sales minus sales return. So if there is any sales return, which is not there in the current question, but if there is any sales return, you need to deduct that and you need to find out net sales. So GP upon net sales into 100 is your formula. Now for the first opening stock, it is given. For the closing stock, now you will apply GP ratio, or you will find out GP ratio for which department? Cloth department or dress department? Yes, definitely cloth department, because we need profit margin of the transferor, and transferor is cloth. So gross profit is 2 lakhs divided by net sales. Now there is no sales return, so sales over here is 11 lakhs plus 1,50,000 into 100. Now again, that was important, this 1,50,000, because for cloth department 11 lakhs is the sales to the outsiders, so that is the sales of 11 lakhs. But cloth is also transferring some goods to dress department of 1,50,000. Now this interdepartment transfer is also made at selling price. So this profit which is earned by cloth department is not only on this 11 lakhs, it is earned on this total sales, that is to the outsiders also and transferred to our other departments also at selling price. So do remember to calculate interdepartment transfer also in this profit formula. because this profit is not only on the outsider's sales. So over here net sales, we can say this would be sales, or we can say external sales plus inter-department transfer at selling price. If inter-department transfer would have been at cost, then we would not have earned any profit on that, then we would not take that element over here. But this gross profit is earned on this both the sales, so take that sales also. So now we'll just calculate. It is 2 lakhs divided by, it is 11 lakhs plus 1,50,000. So 12,50,000 into 100. So that is percentages 16%. So this comes to 16%. So we have found out first element for calculating unrealized profit, that is the profit margin of the transferor. Generally in the previous question they used to give this data. In the current question the data was not given for the current year, for previous year it was given. So that we took directly, and for the current year we found out GP ratio, and that we will apply on the stock. One more thing, if data for the previous year was not given, if they don't specify this for 15%, then what we'll do? Yes, consider the 16% for current year also and for previous year also. Then we will assume that 16% GP ratio is constant for each year. So that is done. Now second element, we need stock of dress department. So opening stock of dress department is 25,000 and closing stock of dress department is 30,000. Now is this stock entirely received from cloth department? No. If you read this statement, the stock in dress department are assumed to be consisting of only 75% cloth and 25% other expenses. So while calculating stock reserve, we need to take only 75% of this stock and not the entire stock. Now what we do, when one department transfers goods to other department, and if this department still held those stock as a closing stock or opening stock, we need to calculate stock reserve. But if in this stock amount, if something is purchased from outsider or if there is some expenses, then there is no unrealized profit on those expenses or on those outsiders purchases. So in this we need to find out how much is the goods received from the other department. So I would say 75% cloth in above. So we need to find out 75% of this. So 25,000 into 75%, it is 18,750, and 30,000 into 75%, it is 22,500. So we can say out of the total stock of 25,000, only 18,750 is the stock or the cloth, and out of the total stock of 30,000, only 22,500 is the cloth. So now we have both the elements over here, the profit margin of the transferor and the stock still lying with the receiver at selling price received from other department, not that 25%, because that 25% was other expenses, and on other expenses we do not have any unrealized profit because that is the actual price which we have paid to the outsiders. So now we have this two department, we can easily calculate stock reserve. So now this 15% we can directly apply on this? Yes, because this 18,750 is cost to dress department, but that would be invoice price to cloth department. See what is happening, cloth is transferring goods to dress department. Now at whatever rate cloth will purchase the goods, to this cost we add some loading, or we can say we will add some profit, and that gives us selling price, and at that selling price we are transferring goods to the dress department. For dress department this selling price is a cost. So if we purchase something from outsider, for us that would be a purchase cost. For the seller it becomes a selling price. So over here cloth department is a kind of a seller and dress is buyer. So this is the selling price for the seller, but it is cost to the buyer. So we record our stock always at our cost. So this is cost to dress department, but that is the selling price to the cloth department, and this 15% is gross profit on sales. So since this is a selling price and this 15% is profit of cloth, we can directly apply on this 18,750 15% of GP ratio. Over here, this 18,750 is selling price to the cloth, and on which cloth has applied 15%. So 18,750 into 15% GP ratio. So that comes to 2813 we can say, and similarly 22,500 is cost to dress department but selling price to the cloth department, and this is the profit ratio of cloth department. So 22,500 into 16%, 22,500 into 16%, so that comes to 3,600. So these are our final figures of unrealized profit, or we can say as stock reserve. So in this question, if you just observe, only this thing was very important. The new part over here was, first you need to calculate GP ratio. For last year it was given, for current year you need to calculate. For calculating GP ratio, we need gross profit upon net sales into 100. Net sales means sales minus sales return, and in your sales we take external sales plus whatever is the inter-department transfer at selling price, because on that also we have earned this profit. And we need the stock of the receiving department, and also in that only that much amount of stock which is received from the other department at selling price. So that was only 75%. We have these two elements and we can calculate the stock reserve. Now the last thing remaining is to give the effect for this stock reserve. Now over here, opening stock is debited. So to give the stock reserve effect, we need to credit it. So we credit opening stock reserve. We can just say this would be credited to general P&L account, and closing stock is credited. So any unrealized profit in this closing stock we need to debit, because unrealized profit must have increased the profit. So to reverse that, we debit it. So this would be debited. So either you can give separate effect for this, or we can give the net effect since the credit side is more. So to stock reserve, whenever you prepare working note, do give the reference working note 1, 3,600 minus 2,813. So 3,600 minus 2,813, that comes to 787, and that is our stock reserve. And lastly, just total your general P&L account and find out your net profit. So 1,85,000 plus 35,500, that is 2,20,500, 220,500 minus 50,000 minus 787. So that comes to 1,69,713. So 1,69,713 is your net profit transfer to balance sheet. So to net profit transfer to balance sheet, or you can simply write as net profit carried down. So that's it. If you just see the question, preparation of departmental trading and P&L account, now it is very simple. We have solved many sums on this, with allocation and everything. We have discussed how to allocate the expenses. If the question gives you some data regarding, we have done the sum on various allocation adjustments, so that we have done. Over here everything was directly given, just this interdepartmental transfer. So it would be debited where the goods are received, and it would be credited from where the goods are going out. So that is done. No stock reserve adjustment ever in your departmental trading and P&L, otherwise charging some profit does not make any difference. So that profit you find for the department without reversing your unrealized profit. But when you prepare general P&L account and when your final profit is going to go to the balance sheet, if there is any unrealized profit, you need to reverse that, for which we did the calculation, gave the effect for this stock reserve, and find out the net profit transfer to balance sheet. So that's it. I hope you understood this question. If you have any doubt or any queries, just write in the comment section below. Do subscribe to our channel, that is Letstute Accountancy, and press the bell icon to never miss an update from us. Thank you.